Good morning, listeners. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 16 September 2020. On the international market, on the economic front, world's both largest countries had some positive numbers reported yesterday. In US economic data, a September snapshot of manufacturing activity in New York State jumped to a reading of 17 from previous month's 3.7. An index of August import prices rose 0.9%, while last month's US industrial production expanded by 0.4%. On China's economic data front, retail sales grew for the first time in 2020, rising 0.5% in August from a year earlier. Also, industrial production in China also rose 5.6%, up from July's 4.8% increase. With this positive economic news around, bond markets were cautious as Fed meeting is in progress, and hence US 10-year benchmark closed unchanged at 0.68. In the crude oil market, the American Petroleum Institute reported on Tuesday a draw in crude oil inventories of 9.5 million barrels for the week ending September 11. Analysts had predicted an inventory draw of mere 1.2 million barrels. This higher than expected inventory draw had a small rally in crude and is now trading at $40.53 per barrel. But the United Arab Emirates, UAE, currently OPEC's third largest producer, breached its OPEC plus oil production quota by a massive 0.5 million barrels per day in August. Now, if the OPEC plus member countries do not follow the pact due to their constrained finances, then the demand-supply equilibrium will be tilted towards supply side and there will not be a significant rally in the prices, as we have been saying repeatedly. In the currency market, US dollar with a strong support at 93 levels, trading at 93.07. 93 to 93.50 had been a range for quite some time now, and all eyes are now on Fed's comments on growth outlook. On the other hand, USD CNY or Chinese yuan continues to strengthen on back of strong retail sales and has now reached 6.78 levels. As we mentioned to you yesterday, we are targeting 675 levels soon and suggest to carry your position until the reversal is seen. Indian rupee was under pressure yesterday and closed cautiously at 73.62 ahead of FOMC meeting today. The next rupee move will be decided by the Fed statements and the dollar movement. Important to note is public sector banks were seen buying dollar yesterday, and it may be on behalf of RBI. In the domestic market, let's start with yesterday's SDL auctions first. Karnataka 10-year SDL cutoff was seen at 665, and for the rest of the states, it was around 6.70 percentage points. As we have been a vocal supporter of holding on to your SDL purchases for a few weeks due to higher increased borrowing plan, we may see SDL yields topping 7% mark, and that might be a good time to pile up some SDLs in your HTM category. One interesting thing to note is to look at others buying in last few sessions. 15 September, 2,442 crores. 14 September, 2,351 crores. 12 September, 2,098 crores. So since Friday's huge development, others for the past 3 trading sessions have been buying north of 2,000 crore daily, and the official confirmation is not there, but we can't rule out RBI intervention here. As we mentioned to you yesterday, we are positive for the bond market for the interim due to lower inflation numbers, but the H2 borrowing calendar will start spoiling the party soon. So be cautious, but now the market will be range bound and you can use our intraday trading ranges rather than taking huge positions. For intraday trading range in USD, INR and benchmark bonds, you may reach out to us on 9930307466 or research at nightfintech.com.